What's going on? Welcome back to the channel. So today we're going to talk to you about companies unveiling their earnings, estimates, and where they might be going. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So starting off, a lot of big names are unveiling their earnings this week. A lot of big swings potentially. So I'm going to be covering SoFi, Tesla, Meta, Microsoft, Apple, and Intel in this video. Aside from that, though, you also have a lot of other big names that could have some big swings, such as Boeing. But for this video, I'm only going to be talking on those. If you do want further kind of updates, feel free to drop some tickers in the description below, and I can kind of do a follow-up video if necessary. But starting off with good old SoFi. So their earnings is Monday before the market does open. Current estimates are 4 cents. For the revenue, 682.2 million. Over the last 90 days though, 8 positive, 3 negative revisions to the earnings per share. Looking at this on a quarterly basis, a little bit more deeper dive. So this 4 cents does represent 94.5% year-over-year growth, 3 cents the low, 5 cents the high. That is based on 14 analysts. Moving over to revenue, so that does represent 14.8% year-over-year growth, 669 the low, 712 million the high, and that's based on 10 analysts. Moving over to here though, you have the implied move of $11. So roughly around $2 in either direction is anticipated. Historically, SoFi always does beat on earnings per share as well as revenue, but despite that though, sometimes you still have it pull back, roughly 50% of the time. More specifically, last couple earnings, so 2 weeks out. So this chart, it's not overly as complicated as what it looks like. So this is what leads up to the earnings: 1 day move post earnings, 3 days, 1 week, 2 weeks after. So I'm looking as far as the 2 weeks, so this column right here. On a side note, if you're into options, this right here does show the 1 day long straddle, 1 day short straddle, 1 week, and then 1 week short. So in case you are curious, you can kind of see this is the long straddle. Feel free to pause this. Goes over a description of exactly what this option strategy is. And then this is that short straddle. So very advantageous, and you can kind of see majority of the time it's better to do the short straddle versus the long straddle. But again, you do whatever floats your boat. But the reason why historically it does go down even despite good earnings is a lot of innovative companies, they kind of get this. Wall Street just really looks at the multiple. And so SoFi does have a 134.72 for the forward PE. So that most likely is going to get called into question once SoFi does unveil their earnings. So just anticipate that, and obviously that is one of the main reasons why it has gone down in the past. Moving on to the second stock, Tesla. So Wednesday after hours, you have this right here. So I'll pull up good old Tesla. So Tesla, Wednesday after hours, 77 cents for the earnings per share, 27.14 billion for the revenue, 12 positive and 8 negative revisions to the earnings per share. Based on the estimates, that 77 cents does represent 7.9% year-over-year growth. So a little bit of a lagging quarter in comparison to the future. 59 cents the low, 94 cents the high. So a lot of volatility is anticipated based on that. That 27.1 billion for the revenue does represent 7.82% year-over-year growth, 25.4 the low, 28.9 is the high, and that's based on 29 analysts. Moving over to here though, you do have the implied move of 7.91%. So pretty much the highest it's been since it looks like Q1 earnings in 2024. So yeah, just anticipate a lot of volatility. That 7.91% does equate to roughly $32 in either direction. So just anticipate a lot of volatility. In Tesla's earnings, when they do beat, they hit a home run out. As you can kind of see, 2 weeks out, historically, Tesla is either up 35, 22, 39, 24, or either they miss and it goes down anywhere from, I don't know, like 3% to, let's say, 18%. So again, that is something to kind of factor in. Historically, I don't think there's any correlation for the earnings per share revenue, so there isn't any trend. It's kind of all over the place ultimately. So this is a quick overview of Tesla. So moving on to the next stock, you have Meta. So let's kind of pull this one up right here. On a side note, if you're looking for a 7-day free trial for Seeking Alpha, I have that in the description below. Very advantageous, a lot of good information, as you can kind of see right here. But same date as Tesla, so Wednesday after hours, $6.73 for the earnings per share, 46.9 billion for the revenue. Over the last 90 days, 39 positive and 3 negative revisions to the earnings per share. Quickly going over here, so that $6 and change is 26.32% year-over-year growth, 615 the low, 725 the high, and number of analysts is roughly 34. That's kind of covering that. And for the revenue, that 46.9 billion is 17.1% year-over-year growth, 45 the low, 47 the high, based on 48 analysts. Quickly moving over to this right here. So the implied move for Meta is 6.37%. And so that works out to be roughly 41.24 in either direction. So a lot of volatility. Historically, they do beat on their earnings and the market really does like it. So a good roughly about 60-70% of the time they do beat, and it kind of causes it to go up on average around 15%. So something again to consider. The downside risk recently over the last year and a half hasn't been all that much there. So I think generally speaking, there is a very positive trend for the earnings per share and just upward trajectory of Meta. So something to kind of keep in mind. So this is a quick overview of that. And like I said, I know I mentioned I wasn't necessarily going to go over it, but if you're doing, let's say, the straddle, whether it be long or short, you can pretty much make some good money. 1 week, you can like 153% move if you obviously choose a long in Meta's case, for instance, in Q1 2024. So yeah, a lot of volatility. Let me know your viewpoint on that. Moving on to the next one, we have Microsoft. So pulling up this. So good old Microsoft, their earnings is right over here, same day as Tesla, so after hours Wednesday, $3.13 for the earnings per share, 68.82 billion for the revenue. Over the last 90 days, 1 positive, 27 negative revisions to the earnings per share. A little bit more details. So that 313 is 6.68% year-over-year growth, based on 34 analysts, 302 the low, 347 the high. Revenue, 68.8 billion. That works out to be 10.96% year-over-year growth. And then you have 68.1 the low, 70.5 the high. So again, all over the place for that. So moving on to this right here. So Microsoft, the implied move is 3.47% in either direction. So not the most volatile, if anything, somewhat fair valued, if that kind of makes sense. But historically, you can kind of see it's about a 50-50 likelihood if the market's going to interpret it as positive or negative. When it is seen as positive, it goes up roughly around about, on average, I'd say 8%. On the downside, on average, probably around 2%. So still a little bit more upside overall as a consensus, but still this 3.47% does work out to be a $15 swing in either direction. And yeah, I think in general, Microsoft, similar to Meta, is having a very positive upward trajectory trend. So yeah, just do that accordingly. Long straddle doesn't seem to be a good play for Microsoft. So if you are looking at playing it, might want to do a short straddle, whether it be 1 day or 1 week. And this, on a side note, was that short straddle. So even more reason just to pause it, read through it, because you can make some pretty good money. Moving on to the next one, Apple. So let's kind of pull up good old Apple. So Apple right now, their earnings is slated for the 30th. After hours, $2.35 is that earnings per share, 124.04 billion for the revenue. Over the last 90 days, 5 positive, 17 negative revisions to the earnings per share. And quickly going here, so that works out to be 7.65% year-over-year growth, 219 the low, 250 the high, based on 30 analysts. Revenue does represent 3.73% year-over-year growth. So you're seeing now single digit with Apple, and most likely this is why Nancy, absolutely crazy politician that's on point with everything, so Nancy and Warren Buffett has been selling Apple. Maybe just lack of good substantial growth, Again, there could be a lot of big opportunity cost elsewhere that people might be rotating. So again, kind of look at that. But moving over to this, you have 3.96% is that implied move. So aside from pretty much at the beginning or 2022, this has been and will be the most volatile earnings. Historically speaking, I think day one, it's about 50% likelihood of the market really seeing Apple's earnings as positive. 2 weeks out though, that kind of jumps up to around 70-something%. So I think Apple is one of those buy the dip type of scenarios. So again, yeah, you do whatever floats your boat, but if there's a dip, historically speaking, you tend to do fairly well because of that. And this 3.96% does work out to be about a $9 swing in either direction. So adjust accordingly, whether you're doing options or whatever else floats your boat. And then last but not least, Intel. So I really do like Intel as a very good value play potentially. I know the business has been kind of struggling a little bit, but looking over here, so 12 cents, or sorry, the January 30th after hours is the date of their earnings. 12 cents is the earnings per share, 13.83 billion for the revenue. Over the last 90 days, 30 positive and 3 negative revisions to the earnings per share. And based on this right here, this 12 cents does represent 77.86% year-over-year negative growth. So again, that's why Intel has been largely lagging. But if you kind of look forward, Q1 seems to be somewhat subpar, but then you're having good growth going forward. So 9 cents the low, 16 cents the high, 34 analysts. And based on revenue, that 13.8 billion. So it's not like they're making no money whatsoever. They're making a lot of money still, but that does represent 10% negative growth. And that's based on 14 analysts. So last but not least, let's kind of go over here. So Intel, is around an 8% implied in move. And so that does work out to be around $1.60 kind of swing in either direction. Historically speaking, similar to, I think it was Tesla, that you either hit a very good run where it goes up roughly about 15-16%. I'm looking at the 2-week column right here, or it just continues its trend down. So it is a little bit more kind of evenly divided for the most part. So yeah, just anticipate a hell of a lot of swings. And if you do options, honestly, I don't think there's any actual correlation with any of this. So as well, I know I didn't really bring it up, but there's right here, you can kind of see old consensuses, the earnings per share, whether it was a beat or a move, the price at the time of their earnings. So again, there's a little bit more details there that you guys can pause and read through. But yeah, Intel is again definitely going to be a very, very volatile one. But yeah, let me know your viewpoint on these stocks. Is there anything else, any other stocks that you feel should be covered? If so, drop a ticker in the description below and I can definitely look at doing a quick video, similar nature, and just covering it. One final thing, pop over to my Patreon where I give buy signals on stocks, options, and crypto. Many of them have been absolutely on point. Most recently, I put this out last night, and honestly, it did go up like a massive swing. So yeah, definitely over the last huge, I think 19 or 0.19 is what I recommended it at, and now it's at 50, so definitely more than about 100 something percent. So definitely worthwhile to pop over to my Patreon, take a look at that, link in the description below and also the comments. With all that, appreciate all of you watching.